Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine.
And thanks for joining us today on Market Journal. I'm Bryce Duskett, joining you from Houston, Texas for this week's program. We are on location at this year's Cattle Industry Convention and National Cattlemen's Beef Association trade show. We are going to have more from the convention coming up on the show, but first we go back to Nebraska. It is estimated that Nebraska Extension could train upward of 10,000 private commercial and non-commercial pesticide applicators on safety measures this year. If you're in need of certification or recertification, there will be numerous opportunities for you to obtain your state pesticide license. These training sessions will allow a person to become certified or recertified to hold a state pesticide license. There will be a variety of training options available for private, commercial, and non-commercial applicators.
So we have our commercial, non-commercial applicators, which are the individuals that you might see fogging for mosquitoes, or if you pay somebody to come to your home and spray your yard, those are commercial applicators. Things like that, people that come into your home and help you deal with pests in your home would be commercial applicators. And then we have our private applicators, which would be people that are applying pesticides to their own farms, to their own land, and they only have to get a license if they're using restricted use pesticides, which are typically a more dangerous or more toxic product. Our commercial and non-commercial applicators often have to have a license for general use products as well, which is basically over-the-counter products. And that's just simply because of the fact that they are so close in contact with other humans. They're applying it to people's lawns, they're applying it to people's homes. So the more training they have, the safer they're going to be as an applicator and the better management decisions they're going to make. So
there are also some important changes that go into effect this year in regards to Nebraska's pesticide certification and license program. These changes will be phased in over the next 3 years as applicators come up for recertification.
Yeah, so for our private farmers specifically, there are some regulatory changes. If you are somebody that fumigates rodent burrows, you will now be required to have a non-soil structural fumigation license, which is category 11. Both private and commercial will have to have that for rodent burrows as well as for grain bins or any buildings or structures that they're fumigating. And then our private folks, private applicators, will have to have soil fumigation added to their license as well, and that would be things like potato farmers that are fumigating their land. So that's one of the bigger changes. Our private farmers who choose to apply pesticides aerially or in airplanes will also have to get a commercial license now, and if they're applying pesticides using a drone, they will also have to have a commercial license if they're using restricted use products.
While safety is the name of the game when it comes to this training, the bottom line is if you want to be able to apply many of the compounds on your operation, it is required by law to obtain your applicator's license. Failure to do so could result in undesirable consequences.
So for commercial and for private, they can get fined. They won't be able to purchase their products. They won't be able to apply their products, and the fines can be quite large because there are some highly toxic products that are available. So it's really important to keep that license up to date. And on top of that, you end up missing out on some of the up and coming problems and pests, and you don't learn about some of the new regulations surrounding some of the products. And so it ends up kind of putting you behind the times as well, which is important.
There is a small fee associated with the training sessions. Private applicators will be charged $50 for the training session, plus a $25 fee from the Nebraska Department of Agriculture for the license. Commercial applicators will be charged $80 for all categories of training, and then a $90 fee for commercial license. Those who are unable to attend any in-person events will also have the option of going through online training. This is a cost-effective method that will allow participants to go through the training at their preferred time and at their own pace. If you're interested in an upcoming training date, we've posted some helpful links to the Market Journal website. Moving on to the markets now. Earlier this week, we were able to catch up with Darin Fessler of LAKEFRONT Futures and Options. We discussed the ongoing tensions between several nations and the possible implications for the grain markets. But we began the conversation by reviewing the wild ride that the grain markets had for the month of January.
Absolutely. It started off 22 very, very strong. I'm so happy for producers out there. We've been getting another opportunity. And as I like to say, look at the price over the calendar. Sometimes the calendar can, make guys a little bit complacent to do something. You still got insurance pricing month starting here in February. And then you got, obviously, who knows what the weather's going to do out there, but price over calendar. But boy, this year has started off on a very strong note.
What was the biggest surprise to you as we started 2022 with a lot of momentum in the grain markets?
Obviously, it's been the veggie oil markets, and then subsequently, obviously, the beans. You look at the bean rally that this market has been on, and you start thinking about, okay, is this really fundamentally driven, or is this much more of an algo / computer type of driven, just momentum buying in here? And I really think that it's the latter part of that, because we're really not trading fundamentals here at this point. Even though we've seen the first week of January, we've seen a lot of decreases with that South American production number, and I was kind of vocal on social media saying, whoa, I think we need to pump the brakes a little bit on the South American crop being a disaster, because it's far from it. Obviously, there are some producers in southern Brazil, Rio Grande do Sul and Paraná, that are would definitely say differently. And there is some areas in those states, though, that are very good. But I think that, you look at February on the next 4 to 5 weeks, how does this crop really finish off for Brazil? Now, granted, I think the crop and that central, the northern tier of the country is going to be just fine. It's that southern part that plants a little bit later. Could they catch some beneficial late rains that really make up for some lost damages earlier on? I think that's very, very possible. And you got to watch where that safrinha corn crop's getting planted now, slightly behind their longer term average here, but roughly 10% sold. I'm not looking at any type of really big panic stuff there. I really think what we have seen in January has been backed by just a lot of momentum. You took out new highs, corn, beans, and look, again, the veggie oil market has been very, very strong. Not only the veggie oil, but you had crude oil really starting to push higher towards that $90 mark, over 90 on the Brent. So that's a lot of things that have happened in January. Be cautious, though. New money flow could really change directions here as we transition into the early parts of February.
Now, Darin, you mentioned that South America weather situation. Also something that folks have attributed the market movements to is this developing situation in Ukraine. What's the bigger market driver at this moment, and how much attention are you paying to that?
I always pay attention to the headlines with Russia and Ukraine here lately. And one of the things I want to make note of, what I've been calling is the Putin flex. We've seen this before from Putin, where you move military assets. We've seen it in 2014 with Crimea. And so to me, is Putin putting positions on here to show strength? I think that is more likely the case here because of because of where their location is, where Moscow's location is, at the Black Sea region. I think it's more of a strategic move by Russia than it is let's throw bombs at the situation. But if I look ahead here and I say, well, what is the risk towards especially the wheat market or the corn market? Because Ukraine's a big corn producer. I look at the U.S. dollar versus the Russian ruble, which has really come off here over the last week. So I really think that the tone between Russia and Ukraine has come down, has de-escalated a little bit. I don't peg it any more than a 15 or 20% likelihood that Russia actually does something militarily besides just moving their military assets closer to Ukraine. But as of right now, I think you look at the Russia-Ukraine situation and compare that to the China-Taiwan situation. I am much, much more concerned about China after the Olympics doing something with Taiwan than I am right now Russia-Ukraine.
Well, let's change up the conversation significantly from that point and talk about exports. Darin, any surprises there that you've seen here in late January, now early February?
Well, we're seeing some exports from the Chinese, which is good. I mean, I should say imports from the Chinese, but that's always a good thing. I don't think it's not much more than what it would typically seasonally be this time of year. Now, Brazil will export a record amount of beans here in January, more likely so in February as well. And so you take a look at that structure in itself and where we're sitting here on U.S. carryout, you really got to wonder, okay, with the inverse between March and July futures, July and November futures, does the Chinese step in here at these type of inverses and really start buying? I think the question is probably no. So that's why I think we need to err on the side of caution and reward this type of rally, because really from here on out, let's say February, March, and probably all the way through August, September, it's going to be dominated by the Brazilian export market. So just be mindful of that. If the U.S. is going to see any type of significant exports here on out from the bean side of things, I think it's going to come in the back half of this marketing year, or maybe the back third or back 20% of this marketing year. So reward this market as we go along here, because these are very, very good prices. A producer can lock in here and still have the flexibility on paper, buying calls, call spreads, if we run into some weather situations or if they feel like they need to be more bullish here out to those summer months.
Just 30 seconds here left, Darin. Final thoughts from you. You began to mention some risk management advice might be a great opportunity to make some of those sales, right?
It really is. Don't let the enthusiasm and euphoria of the market miss out on some good opportunities to make some cash sales while basis is still strong here. You can keep yourself flexible. Because you're making your cash sale does not mean that you're out of the market. There's always options out there. There's always different strategies a producer can be to remain long in these type of environments.
As always, thanks to Darin for the time he spent with us this week. We always appreciate his thoughts and his analysis. I mentioned that we're coming to you today from the 2022 Cattle Industry Convention and NCBA Trade Show. Thousands of producers and industry representatives were on hand for the annual event. During the convention, we had the chance to visit with Don Close, who's a senior animal protein analyst with RaboResearch. Don shared a presentation during the convention detailing 4 changes that the beef supply chain could see while building a more resilient system. But we began the conversation with Don by getting his outlook for the beef industry.
I think it looks incredibly bright, not only with the confirmation that we had just yesterday with the release of the annual cattle inventory report that showed contraction of the herd at an even more aggressive pace than what was expected. But if you combine that with domestic demand and our growth in global demand, I think the United States is in an incredibly bright spot for a number of years going forward.
Don, in this report, you lay out 4 different areas to really focus on. The first is automation. Tell me what you see moving forward in terms of automation in the beef supply chain.
What we're really expecting to see, when we talk about robotics and we talk about our robotics to a point we can bring them into the beef plants, and I think that's at this juncture a bridge too far. But as we take increased technology into the plants, increased monitoring both on a metered and camera basis, that it would help the plant maintenance people determine when something is preparing to break instead of after it breaks. If we look at product flow through the plants, what we're looking for in technology in the short run is that implementation of technology that makes that existing workforce more efficient.
Another one of those areas you laid out, Don, has to do with packaging. Tell us what packaging looks like today and how it could look in the future.
I think at the wholesale level, our packaging is quite efficient. But if you look at the retail side, for my entire lifetime, it's been a foam tray with cellophane wrapping. And that packaging was designed for being oxygen permeable to keep that product bright and red, but it was also designed to last a matter of hours, not days. As consumers' buying habits have completely changed, and we've gone to more use of meal kits, home deliveries, whether that be once a week within the day or within 10 minutes, all of those different end users call for the need of more durability and more stability in packaging. And that's where we think that new generation of packaging is not only antibacterial, but it could extend that shelf life of that product from a matter of hours to a matter of days.
Obviously, another area producers need to be mindful of is sustainability. Certainly a hot topic around here at the convention. What do you want to mention on sustainability moving forward?
I think the first message to consumers or producers is that we have to accept the fact that it's not going to go away. And for the most part, it's good for industry and it's good for the planet. It's there. Back on the packaging piece just a minute, one of the ironies of this whole thing is, in many instances, the very consumer that is clamoring that they would like to see extended shelf life on their product is the very same consumer that is conscientious of the planet from the sustainability front and wants less food, less packaging waste. So it's a tough one to meet both ends on that one.
And that point leads right into sustainability when it comes to transportation, but you see an increase particularly for rail. What do you mean by that?
Here's the thing I'm thinking about. And I'm not an expert on transportation or rail. I did a lot of research in preparation for this report. When I look at the congestion on our interstate highway system today, when I see data that shows that we have a shortage of 68,000 truck drivers today, and that will be better than 1 million in just 5 years from now. I've read a lot about the various projects underway for driverless trucks and how they might fit in. And I think both of those solutions are just band-aids to a long-term problem. I think the overcrowding of our highway system, particularly if we look to see global population expand to that 9.5 billion by 2050, just how much expansion can we see on the highway system, and do we need to divert a lot of that truck traffic to rail?
A big thanks to our analysts for this week. As always, if you have a question for any of our future analysts, be sure to get in touch with us on social media, and we'll be sure to pass your questions along. A love for horticulture and a deep desire to return to the family farming operation near Prague led Kara Susak, current president of the Nebraska Winery and Grape Growers Association, on an adventure that today involves caring for just over 12 acres of grapevines. With scores of vineyards and 36 wineries operated across the Cornhusker state, she believes that Nebraska's vineyard and winery industry is ripe for more growth. You can learn more about Susak's operation and what it takes to operate a vineyard in the February issue of the Nebraska Farmer. What is now time for weather with the Nebraska Extension Ag Climatologist and Market Journal Chief Meteorologist Al Dutcher. Well, Al, taking a look down here in Houston, it's been a bit rainy with below average temperatures, but back in Nebraska, not as enjoyable as it has been down here. What do things look like as we look to the week ahead?
Well, Bryce, that storm system we talked about last week actually pushed much farther southward than the models were anticipating when we put the forecast together. So we've seen the most of the precipitation fall across Kansas all the way through basically central Texas and westward into the Panhandle. Some fairly significant snowfall total has been reported, along with some icing and some good liquid equivalent moisture for the wheat crop that has been starved for moisture the better part of the last 3 months. So if we look forward in time, if we can see a couple more of these systems move across the southern plains before we get into our warm-up in the spring, then we'll have a little bit more decent moisture available at the lower levels. As the jet stream starts to lift toward the north, it can help pull that moisture into our region and help to juice up somewhat the systems that have been moving across our region. I also anticipate that the trough that's been dominant over the Great Lakes for the last 5 weeks will begin to retrograde itself back toward the western United States, and we'll see a more active period start to develop, particularly as we get into late February into March. So let's take a look at the upper air models and see what we can have in store for this week. And the first thing I'll draw your attention to is a piece of energy that's going to be coming down through the northern Rockies as we go through the overnight hours tonight. That will bring cooler air into our region tomorrow, but for today it looks like most of the activity will remain to our north, and we will be in the warmer sector. So we're going to see a rebound in eastern Nebraska back up into the mid to upper 40s, and we'll be looking at lower to mid 50s across the west. Now that trough intensifies as it goes toward the south tomorrow, bringing that colder in. With the coldest of those temperatures in northeastern Nebraska, probably be looking at the mid 30s to upper 30s with lower 40s across the east, and in the southwest probably lower 50s. Just a slight chance for some flurry activity across the western Dakotas. Now as we go into Monday, we'll see the ridge trying to build back in as this trough quickly exits. That will allow our temperature to rebound back up into the upper 40s across the east, and probably the mid to upper 50s across the west, as most of flurry activity takes aim at the lower Ohio River Valley. Now on Tuesday, another piece of energy comes through. It doesn't look like this trough is going to dive down as deep, so most of the cold air will remain across the northern portions of the Mississippi River Valley. For here, we might just see basically a status quo on our temperature, or slight cooling by about 5 degrees, with most of the precipitation well off to our northeast. On Wednesday, we see the first signs of another Arctic blast trying to make aim at the upper Great Lakes region. But for us, again, we don't see that cold air coming in until we get well into the day on Thursday. So we should see some consistency in our temperatures on Wednesday, 40s to 50s in the west. On Thursday, the Arctic air really starts to make its way in, clipping northeast Nebraska. I think our temperatures are probably going to drop back into the 30s across the east. We're probably going to be more into the 40s across the west. But once again, we're going to be lacking the precipitation that's being concentrated around the Great Lakes and Ohio River Valley region. And by the time we get to Friday, we'll start to see another piece of energy trying to make aim across the northern Rockies. And this one is expected as we go into next week and to drop down into the central Rockies, potentially producing some significant snowfall in some of the locations of the higher elevations. So right now we just see flurry activity, with that expanding as we go into the weekend across the central Rockies. As we look at the 8 to 14 day forecast, brings colder than normal conditions next Thursday through the following Tuesday, as that trough being consistent across the east. And in terms of precipitation, with that wave moving in, we do see a chance for above normal moisture, particularly across the panhandle of Nebraska.
Thanks, Al. Finally today, Palmer Amaranth has been at the borders of Nebraska for about 5 years now. In that time, data has shown that crop interference caused by the weed can significantly reduce yields in row crops such as corn and soybeans. However, Palmer Amaranth interference hasn't been previously studied in dry beans until now. A group of UNL researchers have recently released their findings on the subject, and Market Journal's Bill Dodd brings us this story.
We know Palmer Amaranth can significantly reduce yields of corn and soybeans if left unchecked. So, how much can Palmer Amaranth impact your dry edible bean yields? After 2 growing seasons in western Nebraska, researchers have determined that Palmer Amaranth is more competitive with dry edible beans than with corn or soybeans. Furthermore, yield reduction from complications with this weed can be noticeable very quickly.
So because it's a short season crop, the time that dry edible bean is emerging from the soil, it lines up really well when Palmer Amaranth can be emerging. So soybeans, you can usually get ahead of Palmer a little bit because you're just planting earlier in the year. But with dry edible bean, you're going to have that emergence of the crop coincide with the emergence of the weed. And so because of that, we're seeing more yield reduction for Palmer Amaranth. On top of that, in addition to the way that the emergence time lines up between the crop and the weed, dry edible bean compared to soybean is shorter. And because of that, it tends to not compete as well. It's a low stature crop. And so it gives more opportunity for that Palmer Amaranth to emerge through the canopy earlier in the year. 4 Palmer Amaranth plants for 100 or per 1,000 square feet was an equivalent of 5% yield loss. And that's where we're going to say the farmers can start noticing that yield reduction. So pretty low on that number for when that yield reduction is going to occur.
When dealing with crops like sugar beets or dry edible beans, producers have far fewer herbicide options to choose from. However, there are far fewer cases of herbicide resistance. In the case of Palmer Amaranth appearing in this area, if there happens to be herbicide resistance, then your post-emergence options are, for the most part, non-existent.
Post options are gone. So all we really have is pre-emergent herbicide options, and those work really well. But once those wear out and lose their efficacy, somewhere between 3 to 6 weeks after planting, we don't have any other options. And so the best thing you can do as a grower is to apply a second shot of Outlook. If you applied it first, or if you haven't applied that, you can follow up whatever pre-program you're using with Outlook, and that can be applied. You want to get that hopefully out before you have another flush of Palmer Amaranth. But if we can have that overlapping residual treatment, where before the first residual from the pre-treatment wears out, you get a second residual herbicide, and that kind of carries you through the end of the season. So that's our best option. Beyond that, yes, walking the field, hand pulling. We do have folks in the area that are still doing a lot of cultivating, and those are all options, but they tend to get time consuming and expensive, and not a lot of labor right now to do that.
While herbicide treatments may be limited when dealing with Palmer Amaranth, it is recommended to implement a zero-tolerance weed control policy. While you may not see any yield reduction or growth interference from a single plant, That one plant by itself can contribute to an explosion in Palmer Amaranth population down the road.
And so that one plant, as we were demonstrating, can produce, anywhere from, up to 500,000 seeds per plant. Likely that one weed's going to probably be noticeable towards the end of the season. It might have emerged late in the season, and so it might not be that large, and maybe it's only going to produce a couple thousand seeds, but that's still a few thousand seeds that you're can put into the seed bank that next year. And if those are left uncontrolled, next season, the math's pretty extreme with that. That's a few thousand seeds times a few thousand seeds, and pretty soon you have a explosive population growth. And that's this reason behind this idea of zero tolerance weed control, which although that's the term used, most times that's not practical. But if you are driving around in a field, it's otherwise clean, you see a Palmer Amaranth out there, it might be worth it to run out there and pull it before it goes to seed. We got to be thinking about weed control, not just in this year, but also 2, 3, 4, 5, 6 years down the road. And anything we can do to limit that seed input within the seed bank is going to help us down the road.
As we continue to inch our way toward another growing season, those who are planting dry edible beans should stay vigilant of their fields and do their best to ensure that Palmer Amaranth isn't allowed to throw a wrench in the cogs of their operation. Reporting for Market Journal, I'm Bill Dodd.
Thanks for that story, Bill. Nevin went on to tell us that plans are underway for continued research with new herbicides for use in dry beans this year. If you're a grower interested in conducting on-farm weed control trials in dry beans, you're encouraged to reach out to him via email that we have here on the screen. We've also taken the liberty of posting additional information there on the Market Journal website. That is going to do it for this week's show as we come to you from Houston, Texas. If you'd like to watch any of our previous stories, be sure you subscribe to Market Journal on YouTube. Of course, you can also follow us on social media to join in the conversation. We hope to see you next week. Until then, I'm Bryce Duskett. Thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.